Welcome to your Talk Tickers briefing. Today we're diving into the latest quarter for the trade desk. That's ticker TTD.
All right, let's get right into it, because this quarter is a real head-scratcher. The trade desk delivered what we call a classic beat and raise. I mean, this is the kind of news that should send a stock to the moon, right? Well, that's not exactly what happened here.
And this is where the plot thickens. Look at this disconnect. On one side, you have beautiful, strong results. On the other, a stock that immediately started sinking in after-hours trading. So what gives? What is the market seeing that the numbers just aren't telling us? That's the puzzle we're going to solve today.
Okay, first things first, let's build that bull case. Let's look at the numbers that honestly should have had investors popping the champagne.
Wow. Revenue came in at a whopping $739 million. And it didn't just beat expectations, it blew past them by almost $20 million. That is what we call a clean top-line beat.
And get this, that's an 18% jump from this time last year. But here's the real kicker. If you take out all the political ad spending from back then, that growth is actually 22%. Now that's some serious momentum.
And they're not just growing for the sake of growing. Nope. These guys are insanely profitable. A 43% adjusted EBITDA margin? That is absolutely elite. It just screams efficiency and discipline.
So remember I said beat and raise? Well, this is the raise part. Management isn't just taking a victory lap. They're telling the street, hey, Q4 is going to be even bigger. They're guiding for at least $840 million. That's confidence.
And if you look under the hood, the fundamentals are just rock solid. I mean, customer retention is over 95% for the 11th year in a row. Plus, they're buying back their own stock like there's no tomorrow. That's management putting its money where its mouth is. So far, the bull case feels like a slam dunk, right?
So, okay, the numbers are strong, check. But what's the story? What is the big picture that management is trying to sell to investors? Let's get into that.
The entire vision, the whole company narrative, really boils down to this one epic battle. The trade desk's open internet versus these so-called walled gardens. You know, think of Google, Meta, Amazon. They're these closed-off ecosystems where one company controls everything inside. And CEO Jeff Green is super clear about this. His argument is simple. Where's the best stuff to watch and read? The premium TV shows, the big movies, the real journalism? He says it's out there on the open internet, not buried in your social feed. And his big bet is that advertisers are going to follow the eyeballs and the money will follow the advertisers. So what's their secret weapon in this fight? It's a platform called Kokai. It's their AI brain, and adoption is just exploding. 85% of clients are already using it. And you know, it's not just hype. It delivers a 26% better return for advertisers on average. This thing is an absolute machine for grabbing market share.
You know, during the earnings call, they got grilled about the big bad wolf, Amazon. But management didn't flinch. They basically said, look, Amazon's busy playing in its own sandbox, selling ads on its own website and its own streaming service. The trade desk says, we're not playing that game. We're the objective referee for the entire open internet.
Okay, so we've got great numbers and a killer story. So let's flip the coin. Let's look at why the market seems so spooked. What's the bear case here?
And this right here is a huge piece of the puzzle. You have to remember, investors have been on a roller coaster with this stock. I mean, look at these drawdowns over the past year. People have been burned, and that creates some serious scar tissue. The company doesn't just have to be good, it has to be perfect.
So all this doubt isn't really about this quarter's numbers. It's about the ghosts of the past and the fears for the future. You know, what if there's a big slowdown in ad spending? What if the tech giants finally decide to crush them? And investors definitely remember past guidance misses and how much the stock got hammered for it.
So you've got this real tug-of-war, right? On one side, you have amazing execution from the company. On the other, this deep, nagging anxiety from the market. So how do you put all that together? Well, here's our take. Here's the next call.
And this just lays it all out perfectly. The bull case is all about what the company controls, their performance, their tech, their guidance. But the bear case? That's almost entirely about the stuff they can't control, what the broader market is feeling, those big macro fears, and what the competition might do. So, putting it all together, we're calling this one a market perform. Look, the company itself is firing on all cylinders, there's no doubt about it. But the stock is running into a serious wall of market fear and uncertainty right now. We think it's going to basically tread water with the rest of the market until this big fight between the bulls and the bears gets a clear winner.
All right, so what's the trade idea? Well, given all this tension, this tug of war, maybe the smartest move isn't to pick a side. Maybe it's to bet on the rope snapping. We're thinking a long volatility straddle. It's an options play that makes money if the stock makes a huge move, in either direction. The whole idea is that this quiet standoff can't last forever. Something's got to give, and when it does, it's probably going to be a big, explosive move.
And really, that's the billion-dollar question for the trade desk, isn't it? Will their incredible performance finally be enough to overcome all this market fear? Or are the macro headwinds just too strong to fight? That is the drama we'll all be tuning in for next quarter.
And just as a reminder, this is not financial advice.